All right. Listen, we had a couple things that when you're looking at a chart, there are some things that you know, and everybody knows. What is that when you look at this chart? First thing is that I look at is there like a consolidation? The answer is yes. It's all right in there. Okay. The other thing is you could see when the market gets below these blues, it goes. But then in real time, you always got to pay attention to new information. Buyers light up. Does it, you don't have to buy it down there. Does it get priced to react higher? Yeah, it does, right? Then buyers come in again. Does it get it to react higher? And yes, it does. They come in again and again. Does it get it to react higher? And the answer is no, it comes down. So now you could actually be bearish right now and not lose any money because I said bearish, not short. You have to reset to say now buyers are defending this area. All right, now that becomes a line in the sand. This is what's important about real time versus not having information to read, let alone some people, they don't know how to read the real time, whether that not they got the right information. So now sellers are coming in showing an imbalance of 255. Does price react to it to the downside? No, it actually breaches it and breaches it up pretty quickly, right? Did shorts overtake longs? The answer is yes. It's red. This long white bar is showing you the chaser, which is having more buyers moving their bid up than offers moving their offers down. That's this white line. We play it. Another funny thing happens. Boom. You get buyers that are above the recent sell imbalance. Buy imbalance, sell imbalance. And that was at this moment that I had said, now it's got the best chance to breach the previously identified consolidation box. Because always remember, when a market is showing everybody that it's consolidating, which it does all the time, you know you've got people long and short inside this box. You always have people long and short. When more people get short than long, you have a better chance of going up, and vice versa. But either way, the people that you have in a position, if you just ask yourself this, you're going to answer it pretty quickly. And the question is, if you were short, where would you put your buy stop to get out? And most people would say above this yellow box, right? If you were long, where would you put your sell stop to get out? Below this yellow box. So that's why it's important to identify the consolidation boxes and then have an understanding that even if maybe you didn't put your buy stop above the yellow box, you could definitely agree that most would, right? It's easy to assume most are going to put, if you're short, their buy stop above that yellow box. If that's the case, you got shorts that certainly are going to, whether they stop themselves out or not, are going to look like this if price gets above this yellow box. They're going to be worried, mean, angry, and pretty soon they're going to look like this, scuffed up. This is what you're trying to read. Now, when you've got sell imbalance that gets taken out and doesn't reappear, and now you got a buy imbalance, that's where the thought is now they've got a good chance to take this box out and go to the upside. It isn't hindsight's 2020. Those in the room know that. So when we go and actually see everything is kind of lined up for an upside breakout, and so as soon as you get above what we had this yellow box, you create shorts with that mean, angry, frustrated, fearful look. And that just is what you need for the price of anything to go up. More buyers and sellers. And if you have more shorts than longs, you have the more buyers and sellers that are going to come in. Price doesn't go up. Price does not go up unless buyers come in and don't get filled. And they're like, holy, you know what? I still got to buy it. I didn't get filled. I'll try to buy it higher, try to buy it higher, try to buy it higher. And sure enough, they start to creep. And once they get above this, what we had as yellow box, they start to run. They're the buy stops. That's these green little empty boxes. Once we get this next blue imbalance, it's almost like these guys here are chasing it. Boom, it's off to the races. Now, we fast forward it As soon as we got a couple pink triangles, that's the first spot where sellers are saying, "Hey, no, wait, we want to sell it," and it's an imbalance. And that's when I said, now, if you were long from below, you got to really think of covering it. This is the first opportunity where not only sellers are coming in, but price is respecting it. And of course, it comes way off. When you make these ideas into predictions, they won't feel like a good guess or you were lucky. And that's the moment where you're getting it and you're reading it. If you make calls and they feel like you got lucky, no, you're not really using any tools to make that prediction. If you feel like you're guessing, obviously it's not a prediction. If you feel like you're saying it's going to rain after you're wet, you're too late. So you have to put yourself like understanding and walking yourself through all this. So then this pop did not seem arbitrary. Also, the buy imbalances chase, once they kind of breach these ascending triangles, boom, this was going to at least be a temporary top.